doing all this talking, y'all, and I ain't even on, I'm not even on YouTube. That's a shame. Like, oh my God. Wow. Let's check now and see. What's up, Tangela? How you doing? Tony, what's up, girl? Lula. Facebook, Lula, how you doing?
Okay, I think I gotta text you back on.
Okay, let's see now if we're on. Okay, it's showing up online now. It's showing up that we are live.
Okay.
We are live. All right, YouTube, I've been talking to y'all for like 5 minutes. Oh my God. I've been talking to YouTube for 5 minutes and ain't even been on. Now that's cray. So anyway, ladies and gentlemen, I'm excited. I'm excited because we're on the second half of 2021. And we have already seen some amazing changes, transformations, increases, and expansions in a whole lot of people's lives, in a whole lot of people's businesses, in a whole lot of people's ministries. And guess what? For the second half of 2021, I want you to think about all the things in your personal life, your professional life, your financial life, your ministry life. I want you to think about all the things that you want to succeed in, all the things that you want to grow and expand in, all the things that you have dreams and desires to actually manifest and materialize. And while you're thinking about those things, while you're bringing those things to the surface, I want you to take a moment to just understand how important the business of those things are. So whether it's your personal life, whether it's your financial life, whether it's a real business, whether it's a career, whether it's a ministry or nonprofit, what I want you to understand is there's a business to everything that you endeavor to do. This is one of the reasons why Jesus told the parable of the servants about the talents. And if you listen to the story and you take time to really process what Jesus was telling the story about, you will find out in Luke chapter 19, he tells this story of the servants with the talents. And he says that this nobleman who had servants left each servant certain talents. And he went on a far journey. And he said some specific things to the servants before he left. And one of the things that he said to his servants was for them to take the talents and to do business or to occupy till he returns. In other words, Jesus gave a parable to help us understand that anything that you have been given by God to do as a skill set, as a talent, as a gift, as an ability, as a dream, as a desire, it requires a level of business. It requires a level of functionality. It requires a level of operation. And if you are able to wrap your mind around that, it helps you to better position yourself to receive information like what I've been sharing for the last 5.5 months, particularly since we've launched the Ramon Preston Show. I'm using this show as a platform to communicate to my tribe, to my people, information that I know is going to help you scale your personal life, your professional life, and your financial life. But now it's up to you to receive that information. And so what I want to do this week, all week, every day this week, Monday through Friday, while we're here on the show, I want to take some time out to give you some key takeaways from 2 of the VIP workshops that we hosted in the month of June. On Saturday, what was that, June 12th, we hosted a financial workshop. And that financial workshop was centered around the power of QuickBooks. It was centered around creative tax strategies. It was centered around financial literacy. And it was centered around accounting, which is like central to your personal, professional, and financial life. Like, you just can't succeed financially and you don't understand the fundamentals of accounting. You can't succeed professionally and you don't understand the fundamentals of accounting. And I'm not talking about you going to get an accounting degree, because I know people who have accounting degrees and still broke. So I'm not talking about you going to get some educated academic achievement. I'm talking about you understanding it from a business perspective, knowing how to properly set up an accounting system for your personal finances and for your side hustle, your business, and even your ministry. I know a lot of people who love God that got churches and ministries that are broke and that are just ignorant of financial accounting, and they're losing and they're suffering and they're struggling financially and economically in their nonprofits just because they don't understand the fundamentals of accounting. Now, on June the 26th, that was Saturday, a couple weeks ago, we also hosted a VIP workshop on starting and structuring holding companies. And literally, I shared so much information about holding companies that for those who participated in it, they should be like holding company gurus. They should know the game. So anyway, this week, I'm gonna extract like some of the biggest takeaways from both of those workshops. Now, of course, in the description of this video, with the exception of Facebook, I didn't put anything on Facebook, but if you're watching from YouTube, you'll see in the description that there's a link to a offer that we have going on for you to get access to either one of those 4-hour workshops that we hosted for $29.99. And so if you click that link, it's going to take you to our university training platform. It is a secure platform, and it's going to prompt you to either sign up. If you've never signed up to our platform, it's free to sign up, or to sign in if you are in fact already enrolled in some type of course or have ever enrolled in a course on our platform. And then once you, excuse me, sign in or sign up, it's going to give you the option to purchase the workshop for $29.99, and you'll see on the platform that it's an amazing offer, especially if you have a desire to start or to structure a holding company. Maybe you already have a business and you just don't know how to really scale that business. You really don't know how to run it. You don't understand like the basic fundamentals of running it. Well, these 2 workshops that I hosted, these 2 workshops will really help you to not only put the right important systems together in your business, but to help you put your business together in a way that you can actually operate it and start succeeding in your operation. Because when you think about the day-to-day operations of your business or holding company, whatever type of organization you have, or a nonprofit, what does that mean? I'm going to talk about that this week. And so there are a whole lot of takeaways I'm going to give you this week. I'm going to answer a lot of questions. If you want to give me some feedback, you can drop any feedback in the comments. You can feel free to, you can't call me because I'm using my phone this week until I get this situated with Facebook. I'm gonna have to use my phone to at least stream into Facebook. So if you would like to call, you can always dial 404-478-7213. That's the number that you can use this week while we're on the show live, and I'll be able to take your calls on that line. That's 404-478-7213. So this is going to be a 5-part series, Monday through Friday, on some of my key takeaways from our 2 recent VIP workshops. I kind of started the conversation Friday, if you were on the show, and I shared with you 5 of my top most or the 10 most common questions for holding companies. So I'm gonna run through the first 5 real quick, and then I'll give you the second 5. So today we're just gonna, let me see, Siobhan says, they will definitely help because the workshops have tons of in-depth info and it is well broken down. Yes, it is. So today, our whole show is going to be based on the 10 most common questions for holding companies. So keep in mind, the workshop is available. You could click that link in the description and you could get access to all 4 hours of this training for $29.99. And we also have workshops. We have PDF forms that you have available to you when you purchase that workshop. But I'm going to be talking about a lot of the key takeaways anyway, so you can just kind of go for the ride this week. So the 10 most common questions for holding companies. Question number 1 we talked about Friday was, what's the best state to register a holding company in? Well, we already know a lot of people, they start holding companies in Wyoming, in Nevada. Some even go to Delaware and start their holding companies. But either way, you have to register some type of company in the state you're doing business in. So if you, like me, want to be the brand ambassador of your company, if you, like me, want to be known, want to get as much attention as you want to, then it really doesn't matter, because a lot of people who start holding companies in states like Wyoming and Nevada, they do it for certain favorable advantages that they have in terms of protecting their company and protecting their name, and for anonymity, meaning that they don't want people to know that they own the company that is operating in a certain state. So if that's you and you just don't want to be known, you don't want people to be able to track you down as easy, then it may work for you to have a holding company in a different state. Or you might just be in a state where the laws are just so crazy, you want to add an extra layer of protection. But having a holding company in general is going to provide you an extra layer of protection. Like, for example, I don't have a holding company in Wyoming or Nevada. My holding company is in Georgia. So any other company that I start in Georgia is going to be under my holding company, right? But at the same time, the name of my holding company is my name. It's Ramon Preston Enterprises. So ain't nobody going to have a hard time finding me. Is it glitching on you?
It went out.
It did? Oh, wow. You're going to have to take it by there and let them check it then.
Yeah,
Wow.
I knew it.
Ooh, yeah. But you good.
Okay.
It's covered, so
Okay.
glad you got that extra layer of insurance on it, so
Right.
just in case. I ain't gonna tell the world what you did today. I ain't gonna tell nobody what happened to my personal assistant today, but
Dad, I know you probably wasted
she over there glitching.
3 times in my car.
Yeah, 3 times.
In the new car, yeah.
So number 2, the second most common question for holding companies: what is the best way to get funding for your holding company? I told you, the first way and the best way should be through business sales, because sales is the heartbeat and the lifeline of your business. So I'm not discouraging you from getting funding in terms of like loans, whether they're SBA loans or other types of loans. What I'm saying is, don't lean so much on loans and funding when you're not even doing your due diligence to put the effort in to actually make sales. I talk to a lot of business owners who all they trying to do is get a loan and get funding, but they ain't trying to make no sales. They ain't trying to get better at being a salesperson to get their products developed enough that people really want to buy them. Question number 3, how many businesses can you have under your holding company? You can have as many businesses as you want. You can have hundreds of businesses. Just know every time you start a new business, a new operating company, a new subsidiary under your holding company, that you have to have a separate EIN, or you should. You should have a separate bank account. You should have a separate, you should have a separate EIN number, a separate bank account, and you should have a separate accounting system. So if you're using accounting systems like QuickBooks, you should have a separate accounting system. So that means if you got one holding company, and that one holding company owns 5 LLCs or 5 subsidiaries, then that means you're going to have a total of 6 QuickBooks accounts. You're going to have 6 different bank accounts. You're going to have 6 different Secretary of State articles of organization. You're going to have 6 different operating agreements. So you can have as many businesses as you want under it. You just got to know that all of those businesses need to be separate, because if you don't separate those businesses like that, and you're called to the carpet on something because you're trying to prove that this is a separate entity, and somebody can call you to the carpet to show that it's not a separate entity, then you're going to find yourself in a sticky situation. Question number 4, how do you license intellectual property, license equipment, or license other assets? And what I mean by that is, let's say if I have a holding company, right? And I have books that I want to write. Well, I may not necessarily want my books to be owned by a publishing company if I start a publishing company to publish my books. I may start a publishing company just to publish my books, just to provide the service of publishing and distribution, but the intellectual property of my copyrights and of my content, I can actually sign the ownership over to my holding company, so that my holding company can own the assets of my copyrights. And then I'll be able to license my copyrights to my publishing company, but my publishing company doesn't necessarily own it. You could do that with recipes if you're in the restaurant business. You could do that with other proprietary processes or systems that you come up with. And one of the reasons why licensing your intellectual property is important is because you want your holding company to hold assets. You want your holding company to build the purchasing power so that it can have equity in the business market, in the business world, meaning that your holding company becomes more valuable because of the assets that it owns. So it's kind of like, some of y'all familiar with like record labels, like what is it, Rockefeller or Bad Boy, you know, with Jay-Z and Puff Daddy. Well, their record labels have value not because of new business that they're creating necessarily. Their labels have value. Why? Because of the catalog of copyrights and publishing rights that they own or masters from other artists. So that's a form of intellectual property, but those are assets that give value to that business. And you want to create that. You can license equipment. So for example, if you have an operating business that requires equipment to be used, right? And that equipment is valuable, you may not want your operating business to own all that equipment. So let's say if your operating business is using equipment and the equipment it's using is worth $100,000. Well, if somebody sues your operating business and your operating business owns all those assets, then you expose those assets to that lawsuit. But if your operating business uses equipment that it doesn't own, but another company owns it that you own, and your other company licenses it so that it can use it, now all of a sudden you're adding these layers of protection. So this comes with that concept of the holding company that makes a world of difference, especially when you really start doing business and building your enterprise out. What are the tax advantages of a holding company? Well, most of the tax advantages are realized in how your holding company receives pre-tax revenue and distributes that or reallocates that for investment purposes. Now, depending on the type of investment that your holding company makes with pre-tax revenue, depending on those types of investments, some of those can be typically considered non-taxable events. This is one of those major strategies. Like, this is like one of the top 10 most common questions that I'm answering. But I'm telling y'all, that question right there, just the answer to that, is a game changer. Let me give an example. I done gave so many examples of this. I hope y'all, if y'all understanding me, I know I'm talking fast, but I really hope y'all get what I'm saying right now. Let me see if I can find my holding company graph. I used that graph. I used it last Saturday when we did the workshop. So let me answer this question by showing you this graph. For those of you that are on Facebook, you can see that graph. I know it's backwards. So this is the graph that I can kind of use to show you what I'm referring to right here. So if you look right here, this is your holding company. I'm just using this to answer the question on what are the tax advantages, okay? So let's say this is your holding company right here, okay? And then right here, you have an active business. So this business is out there getting the bag, okay? You out there grinding, making money, but this business is actually owned by your holding company. You own the holding company. Well, when this business starts making money, and again, it depends on the type of investments. This is why you need CPAs and tax strategists and lawyers and experts in your credibility kit, so that when you're ready to make certain financial decisions or investments, you can ask the right questions to the people who know the tax ramifications of those decisions. But this is a part of that advantage. So this business makes $50,000. And you can take that $50,000 and your holding company controls that 50 grand, because this money over here can easily come to the holding company because the holding company owns this operating company. Well, when you're doing business on a day-to-day basis, it's not like you're paying taxes on that $50,000 today that you made, the day that you made it. So that's considered like pre-tax revenue. This is money that came into your business, revenue that you generated, 50 grand your holding company holds. But there can be an investment property that your holding company purchases, or some type of real estate acquisition your holding company makes. And depending on how you structure a deal like that, this can be considered a non-taxable event, meaning that you won't have a tax liability when your holding company next year does the taxes and shows on its taxes that it made 50 grand, but it reallocated it and redistributed, in other words, to an investment, to a real estate investment. And again, there are some events that might not be considered non-taxable events. Okay, there are some investments that might be considered taxable events. But again, that is going to be based on you just taking the time to really build your credibility kit and make sure that you got the right people in your corner, so that when you want to make decisions like that, you can make educated decisions like that because you've done your due diligence. But that is a part of the tax advantages that you have. And again, y'all, just that one strategy alone is worth you learning all this stuff that I'm talking about. It's worth you learning it, because it's going to change the way you do business. Like all of these major corporations are doing things like what I'm talking about. They are buying up other businesses. They're creating mergers and acquisitions. They out there making huge deals, and they're doing it with pre-tax revenue. They're doing it with money that they hadn't even paid taxes on. And by the time they get around to pay taxes, guess what? They like, we ain't got no money, dog. We had more expenses. We had depreciation. We had so many losses in 18 areas over here. The gain we got over here in these 5 areas ain't even putting us in a place to pay, you know, in a position to pay taxes. So you gotta learn this. All right, let me get to the next 5 questions. Okay, so the next question number 6 is, what is the best way to invest through a holding company? I kind of answered that question just now. The best and most common way to invest through a holding company is in the form of mergers and acquisitions, as well as in real estate. So when I say mergers and acquisitions, that's kind of like a sophisticated way of saying, if you have a business that's running and it's owned by a holding company that you own, well, there are symbiotic flows of business that you're going to be looking to do. Meaning that, for example, I'm in the consulting, in the coaching, and in the educational and training space for business, for financial literacy, for real estate investing, and for leadership, whether it's ministry or marketplace leadership. So let's just take my situation, for example. Well, there may be somebody that's in my space doing something similar to what I'm doing, but they may be in a position that they want to sell their business. Let's say if there's a consulting firm that's led by somebody who wants to retire, but they spent a ton of money on creating their own app, and they have an app and they have a certain software and a certain system that they use that they have really developed a smooth organization, and they may even have a client base, and they may even have a good pipeline and an infrastructure where it's worth buying, but it's in a similar space that I'm in. Well, a merger and acquisition can take place. I can actually hire a business broker to go through the valuation process and the due diligence process of that business to make sure that the business is worth me acquiring it, and we can create some type of merger or just a whole acquisition. So that's one way of investing through a holding company. Another way, which is probably one of the best ways, somebody's trying to call me. One of the ways, which is one of the best ways, is through real estate, because a lot of real estate deals are like non-taxable events, and real estate provides so many benefits. You know, I teach, we in our Blueprint Game Plan, some of you are familiar with our Blueprint Game Plan program. Well, in that program that we have, I have an entire set of courses teaching real estate investing. And one of the major lessons that I teach in our real estate investing program is why real estate is the ideal investment. Why real estate is the ideal investment. The I is for income, the D is for depreciation, the E is for equity, the A is for appreciation, and the L is for leverage. So I teach a lot of creative principles on real estate investing. That's why I believe it's one of the best ways to invest.
I guess it's a question.
Okay.
Been set up holding company in Delaware for intangible assets tax protection. I guess they asked the question.
What's the question, or what was the statement?
Like set up holding company in Delaware for intangible asset tax protection.
Tangible asset tax protection. I mean, you can say, like, I understand the reason behind, or some of the reasons behind setting up a Delaware holding company or a Wyoming or a Nevada. But what I want some of you to remember, some of you that are small business owners, some of you that are just startups, you're just getting started in your business. You don't have to like have this whole sophisticated infrastructure to the point that you're like, oh, I got to have a Delaware LLC, a Delaware holding company. Because a lot of the stuff you really don't even understand why a lot of companies use Delaware as opposed to Wyoming, as opposed to Nevada. But there are a lot of big companies that you know that are like in the public. They don't have Wyoming, Nevada, or Delaware LLCs. They got holding companies in their own state. Because fundamentally speaking, these businesses in and of themselves, where no matter what state they're in, are already providing certain levels of protection for tax purposes or for liability, legal purposes. They're already providing it. So I'm not discouraging any of you solopreneurs or side hustlers or small business owners. I'm not discouraging you from doing all those what seem to be major sophisticated things with your business infrastructure. What I'm saying is, I have met more than enough solopreneurs, small business startup entrepreneurs who so focus on trying to do all that and they still ain't making no money. They still ain't got no products and services. All they got is good ideas. All they got is a whole lot of information and conversation. And we got to push past that. There are a lot of companies that are major movers and shakers in the United States of America that don't have those type of infrastructures. And guess what? They make a whole lot of money and then they hire people to create those big sophisticated infrastructures. Because sales solves all those problems. So don't be so sophisticated in your mindset where you're like, oh, I got to do this and I got to do that and I got to have this. Because I get all these, we get inboxes all the time. We get emails and messages from people all the time. And they always throwing out these codes and these words. And I'd be like, huh? What are you talking about? Are you making money? Like, are you doing anything every day to build your business other than trying to figure out, well, this holding company need to be this and I need to have this type of business, and you ain't making no doggone money. You're just wasting a lot of time. That's what you're doing. So both strategies, I'm talking about the strategy of investing through a holding company, through mergers and acquisitions in real estate. Both of these strategies can create exponential growth. But real estate generally provides many more economic and tax advantages. That's what we need to be focusing on. Okay, question number 7. What is the best way to transfer assets within a holding company? So if you want to transfer assets within a holding company, what is the best way? The best and most common way to transfer assets is through an asset transfer agreement. I know that sounds sophisticated, but it's simple. This agreement is typically between an individual or a subsidiary and a holding company. Similar to the license agreement, this should be done by a professional, but can be drafted by the entrepreneur with the same process. Let me give an example of what an asset transfer agreement is. Let's say if you have a car that you got the title, and you want this car to be an asset owned by your business. Well, you just do an asset transfer agreement and you transfer the ownership of that car, to the holding company or to some operating company. Let's say if your holding company owns a car, or some type of vehicle, and your holding company wants to lease it to an operating agreement. It's going to be a lease agreement, or it's going to be a whole asset transfer agreement. You may have other assets that you want to transfer. Like, man, I'm giving y'all so much gold. I'm giving y'all game. Here's the thing. When you are building wealth, you want to have everything, but own nothing. You just missed it. That's some gold right there. I'm telling you, I'm giving them gold. I'm just going, let me hold my peace because I got to go. I got a 1 o'clock coaching call. What, we got a coaching call or a session? Okay. But let me just give y'all this gold. You want to have it all, but you want to own nothing. Like, this is what wealthy people do. Wealthy people don't own nothing personally. They own everything corporately. Their organizations own everything. But they have access to everything that their organizations own because they own the organization. But because they do it in that strategic, sophisticated way, they are able to provide a level of freedom, a level of flexibility to themselves, and it affords them a certain lifestyle. I'm just saying. Here's my next question. Number 8, what is the best way to be paid within a holding company? Most experts recommend owners to be paid through the holding company, not the operating subsidiary. So if you got businesses that are out there operating, making money, right? You don't want to be pulling money from the operating businesses. You just let all that money flow up to the holding company, and you take a distribution or owner's draw, whatever you call it, from your holding company. By doing this, you allow all the revenue from the subsidiaries to flow up to the holding company, and then you take an owner's distribution or draw from there. All this information that I'm giving y'all, I'm extending it to you from that link for $29.99. You get 4 hours of me doing what I'm doing right now, specifically on a holding company. But then there's another workshop that I did just on finances, on accounting, on QuickBooks. You got to learn this stuff. Like, you're not going to grow in your business. I don't know why people, it's like, oh my God, last week when I was in Miami, Brandon was giving some statistics. I was sharing a little bit of that Friday. Like, if you listen to some of the statistics he was giving, it's crazy. The statistics that he gave was, okay, number one, there are over 31 million small businesses. 31 million small businesses in the United States. 2/3 of those businesses fail within 3 to 5 years. Like, they're non-existent. But now think about it. If there are 31 million businesses in the United States of America, right? And out of those 31 million businesses, if 2/3 of those businesses, 22 million of those businesses, if they fail, but if you go out 5 years, we're still going to see about 31 million businesses. So if we have 31 million businesses today, and 22 million of them are going to fail in 5 years, how can we get 5 years out and still have 31 million businesses? It's because within that period, you've had 20 something million businesses that started fresh. Yeah. So his point was, every 3 to 5 years, there are 20 something million businesses that fail while 20 something new businesses are starting. So it's cyclical. It never stops. Every million businesses that fail, basically for every business that fails, there's a new business that start for another business to fail, for another one to start. It never stops and starts. Wow. But who wants to be in that cycle? Ooh. Some of you listening to me, you don't want to be in that cycle. And you may say, oh, I still got my LLC though. But the truth is, you have a business, but what you're doing is just paying the annual fee just to keep it in existence with the Secretary of State. But in actuality, it already failed. It failed because it wasn't making enough money to survive. Wow. So a lot of people are paying annual fees for a failed business. Think about that. And then he started talking about why these businesses fail. They fail because they don't have the right information. They fail because the owners of those businesses are not business owners, and they have not developed to actually run successful businesses. They don't set goals. They don't educate themselves. They don't spend money on learning, and they don't do nothing. All they do is just make $10 and spend $12. And they wonder why they $2 in the hole every day. Well, you made 10 and you spent 12. Then tomorrow you spent 12 and made 0. Then the next day you spent 20 and made 2. And all of a sudden, within a year or two, you 10 grand in the hole and only made $20. Right. So you just got to do better. Yes. Okay, here's question number 9. I got 2 more and I'm gone. Why do entrepreneurs need a holding company? So why do you need a holding company? Because some people don't believe you do. Here's why I think you need a holding company. Holding companies foster innovation and expansion, meaning that when you build a holding company and you have an operating business under it, it fosters innovation and expansion for you. Let me give you an example. Most entrepreneurs, when they don't have a holding company, they start a company that really becomes an operating company, but it becomes a prison. So if you start a landscaping business or apparel business, but you don't have it under a holding company umbrella, well, in 6 months you get bored because you ain't making no money selling clothes, and now you done put all this time and energy in this one operating business when it should have been under the umbrella of a holding company, so that if it didn't work, you can move on to something different. Because now your holding company fosters innovation and expansion. Holding companies also provide a concentration of economic power, meaning that when you start making money, you're able to move that money throughout your holding company in a way to continue leveraging your economic power. Holding companies also allow entrepreneurs to remain creative, flexible, and free to make exchanges in the marketplace. While I was in Miami last week, I was talking to a lot of people. And man, some of the stories that I heard, just stories about the type of taxes that some of them business owners were paying because of how they had their company structured. I was like, shh, man, you out there getting money, operating a business, but you need to learn the real wealth building game, and that's with a holding company.
Wow.
It went out?
It's going crazy.
Oh, wow. Let me see. Yeah. It done got in there. You got to take it to, we got to take it by there today.
Oh.
Yep. Womp, womp, womp.
Oh my God. I thought it was so good.
Nah, I figured that. I figured once it got in there.
Oh, man.
Yep. All right, here's the last. I'm over here saying womp, womp, womp because somebody's MacBook just went out. Because somebody spilled coffee all on their MacBook this morning. Yep. Their MacBook just went out because they spilled. I mean, she had a big cup of coffee too, and knocked the whole cup over on her MacBook. Here's the last question, ladies and gentlemen. What is the biggest disadvantage of owning a holding company? The biggest disadvantage of owning a holding company is the lack of understanding, because you don't know about it, you don't know what you're doing, the lack of awareness, and the lack of practice as an asset manager. Most people who fail in business, period, are people who do not have an understanding and an awareness and a correct practice of being a business owner. Of being a business owner. Like I can't even say it amazes me, but it's just sad how many business owners are so arrogant about what they don't know. Oh, I know that. Oh, yeah, I know that. Oh, I understand that. Like when I talk to business owners and they talk like that, I'm thinking you're so arrogant and you're prideful, but your arrogance and your pride is to defend your ignorance. You can't defend your ignorance. As successful as I may consider myself to be, just last week when I'm sitting in Miami for a couple of days for 8 hours straight, listening to people brain dump on me billion-dollar information, billion-dollar strategies, billion-dollar principles and practices, the whole time I'm in there thinking, I don't know nothing, man. I'm so goofy. I'm so behind. I wasn't in there like, oh, I know that. Oh, yeah, I understand that. And there were some entrepreneurs in there that when there was some interaction taking place and questions asked, some of them had the nerve to be like, how are you going to talk to somebody who's worth $200 million and when they ask you a question, you in there acting like you know something? Mm-hmm. Like the guy up, he's standing up there, he's worth a couple $100 million. He drove his Rolls Royce there after getting off of his private plane. He's worth a couple $100 million. Just think about this scenario. Mm-hmm. He's standing in front of a group of entrepreneurs. He asks a couple questions, and an entrepreneur who ain't doing nothing has the nerve to act like they know what they talking about. And so he was killing them, because he'll ask them, so how much money are you making every year? How much money is your business? How much revenue does your business generate? We generate about $100,000 a year. And I know he thinking to himself, I spent that on fuel to get here.
Right.
So he'll say something to the person like, well, you know, if you did this, he was like, oh yeah, we've been doing that for a few years. Like, that's the last thing I would be saying. You sound stupid. You're making $100,000 a year. You're talking to somebody who's worth 200 million. I would be like, oh, wow. Even if I knew what he said was right, because I knew it before, I'm not going to be like, oh, yeah, I know that. Yeah. Oh, yeah, we did that. No, I'm going to be in there acting dumb, goofy. Like, oh, wow, I didn't know that. Because obviously you know something I don't know. You're worth 200 million.
Yeah.
Especially if I got Uber there. You just really make me sick when they do that. Just get on my doggone nerves. See, I'm ready to click.
There, you ready.
I'm ready. I gotta go, y'all. I love y'all. I hope y'all enjoyed these top 10 most common questions for holding companies. So one of the biggest disadvantages of owning a holding company or a business in general is a lack of understanding, a lack of awareness, and definitely a lack of understanding the practice as an asset manager of a business conglomerate. Most entrepreneurs, listen to this. This is my last statement. I'm gonna drop the mic. Most entrepreneurs never, N-E-V-E-R, never invest enough time, enough training, enough money, and enough effort into becoming masters at leading such complex companies.
Wow.
Period. 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 Most entrepreneurs never invest that. And unless you have a Brinks bag experience, unless God just does something supernatural for you, miraculous for you in your business, you ain't gonna never get there if you ain't putting in that work. With your time, with your money, investing in your education, in your training. And I'm not talking about every once in a while. There's no way I'm gonna wake up and run a business every day and not learn something and not grow and not develop. It's just ridiculous. There's no way I'm not gonna do that. I'm so fixed on becoming a better version of myself as a business owner, as an employee of my company. I have to learn and grow. My life depends on it. My family depends on it. My legacy depends on it. Hey, listen, ladies and gentlemen, this is day one, part one of a 5-part, 5-day series of discussions that we're going to have this week based on some key takeaways from our recent VIP workshops. We hosted 2 4-hour workshops on starting and structuring a holding company. We have another workshop that we hosted live, virtual, on QuickBooks, accounting, tax strategies, and financial literacy. If you do not have access to that workshop or to both of those workshops, click the link, go to our university training platform, and take advantage of that. We're preparing for an upcoming mastermind. It's going to be a business coaching mastermind. You can find all that information on RamonPreston.com. As a matter of fact, if you would like to have access to both of those workshops and you're just confused at how to go to the website to navigate around getting access to them, all you have to do is just reach out to me. How about that? We're going to make it real easy. Just text "I'm ready" to 404-478-7213.
Okay, so then you had a couple of questions, right?
We got a couple questions on YouTube.
Yeah, I just went onto my phone. They just took action doesn't mean they know it all. It was just,
Oh, okay. Thank you.
Right. And then he was like, do you have to update the articles of incorporation for your state every time you change the ownership or operating company to the holding company?
Ask the question again.
sorry.
Ooh,
We'll speak to
wow,
the-
for real. All right, let me see the question. The question is, let's see here. Let's see here. Do you have to update the articles of incorporation for your state every time you change the ownership of the operating company? Meaning, should you remove the members to the holding company as the members now? Okay, so if I understand your question, you're saying if you have an existing operating company and you want that existing operating company to be owned by a holding company, but that existing operating company has members like you, your wife, 2 partners, 3 associates, 2 of your kids. If I'm understanding it, you're asking, do you have to update the articles of incorporation? Well, number one, if you have articles of incorporation, that's not a LLC, because a LLC doesn't have articles of incorporation. They have articles of organization. Okay, so it's a different type of article that you're filing for LLC. If your operating business is like a S corporation or a C corporation, then you have articles of incorporation because you pretty much have shareholders. So in that case, you would have to change that, because the idea or the purpose behind an operating business being owned by a holding company is for the holding company to be the only shareholder or the only organizer or member of that corporation or LLC. That's the goal. You want your operating business to be a wholly owned subsidiary, meaning that your holding company owns 100% of the shares or ownership interests, whatever you structure your operating business as, whether it's a LLC, C Corp, or S Corp. So yeah, that has to change. Now, personally, because I have a lot of clients who have existing operating businesses that want to start new holding companies, personally, I give them two forms of advice or wisdom or whatever you want to call it. Number one, I say, go to a lawyer and let a lawyer draft that paperwork to transfer that ownership so that it can be done the right way, the legal way, just in case you're called on the carpet at some point and another attorney or legal expert realizes that you got cracks and crevices in how you did the paperwork because you went to Office Depot to do it, or you Googled some type of paperwork, thought it was the easy way, and it's going to cost you a whole lot of money. That's number one. Number two, you either go to an attorney, or if that operating business is not making no money, you dissolve it. It ain't making no money. You start a new holding company. Then once your new holding company is started, you start another operating company under it, so you know it's done the right way, especially if your operating business is not making any money. Or you just transfer that company over. But a lot of times, if it's a company that's been operating but it ain't really been making no money, you just dissolve it and move on. So I hope I answered that question. All right, ladies and gentlemen, I love y'all. Appreciate y'all. I will see y'all tomorrow for part 2 on these VIP workshop takeaways. If we can do anything to help you, just reach out to us. The number is 404-478-7213. We are out. Love you. Have an amazing day. See you tomorrow.